The sentiment on Tesla stock has gained momentum, and with the stock jumping over $100 since last month from $330 to $440 today, institutional analysts are all scrambling to raise their price targets, otherwise they start to look like fools. What's fun is hearing each of their excuses. Today we'll cover Barclay, Canaccord, and Benchmark. First, Barclay's Dan Levy called Tesla stock the OG meme stock, saying that Tesla continues to have a disconnect from price and its near-term earnings power. That's a real insult and shows they still don't get the company. We'll watch that video. Second, we have George Gianarikas of Canaccord, who increased Tesla's price target from $333 to a whopping $490. That's $160 increase. Oddly though, George says this wasn't an easy one as potential for downgrade was high. And then he proceeds to upgrade by $160. Finally, we have Benchmark. At least this firm raised their price target to $475 from $350 in late June, a couple of months ago, right at the time of the robotaxi rollout. But they're staying put for now. I have a feeling they'll be chasing the stock soon. We've got Joe Bakhti here with us. Joe is an economist and tech entrepreneur. He has a YouTube channel covering both Tesla and AGI. Check out his website, community@pioneerlands.net. Welcome, Joe.
Great to be here, Herbert.
Yeah, so I don't know if you're following. We've been obviously, of course you are, all the institutional analysts, but this one's fun. Yes, a couple guys just refuse to believe that the stock is rising and that Tesla deserves it. So this Tesla is being called the OG meme stock from Barclays' Dan Levy. We'll watch that video. It's not a meme. It's a company that builds rockets, AI, energy grids, and cars that outsell entire legacy brands. But if that's a meme, that's the joke on you. Basically, yeah, he's talking about the, OG means original stock that's based on memes, which is like he didn't think that if it was worthy of the rise. The jump has brought more attention to what is described as an ongoing disconnect between the stock's moves and its near-term earnings power. Let's watch a little bit of what he said.
Calling a stock a meme stock is almost like an insult, that the implication being that there aren't any fundamentals behind what is moving the stock. Is that what you're trying to get across, or just that the moves can be wildly sharp and just suddenly? I mean, I'm just trying to figure out if this is sort of an indictment of the stock or if this is actually a good thing.
Well, there is more to the stock than the meme phenomenon. But the reality is, as we point out in the note, it is the, so to speak, OG meme stock, right? There is a very robust retail following that is driving it. In many ways, we've said the fundamentals just don't matter. That's why the stock trades at sort of a nonsensical PE multiple, 180 times 26 earnings. Bitcoin is really what we say is just the better comp. And then there's other technical factors as well that are driving it, Mag 7 relative performance, and also technicals such as option activity as well, that are much more than the typical direction of fundamentals.
Yeah,
I'll pause there for a bit and you can react to that segment. What do you think, Joe?
Well, before we mock him, I think he's a great example of the fallacy of Wall Street, that they are stuck in the past, how they analyze stocks. They look into the past, they look backwards and see, oh, it's not trading on backwards fundamentals. No, it's trading on forward fundamentals. And forward fundamentals are very different from a meme, and they're very different from fantasies, and they're very different from pump. Forward fundamentals are for people who understand and predict the future, can triangulate what a company is doing, and can then simulate what these future cash flows will actually be. And if you do that, you see that this is one of the most fundamentally undervalued companies. But you can only understand that if you understand future cash flows and can time the future cash flows. And that is a discipline that Wall Street just completely ignores, with the exception maybe of Dan Ives and maybe Morgan Stanley.
What do you think about his comment that this is driven by the retail investors, and that's why? Oh, and the the comparable is Bitcoin.
Well, I think if you say the comparable to Tesla is Bitcoin, you don't understand neither Tesla nor Bitcoin. I think they have completely different cases. I think both are very bullish for completely different reasons. You cannot compare these two. And it just shows me also that he calls it a meme stock. I think he lacks a complete understanding of the stock. And that means he draws analogies which are completely wrong. Like both meme stocks and Bitcoin. Bitcoin is not a meme stock. Bitcoin is something completely different. And Tesla is neither meme stock nor Bitcoin. So he got it completely wrong. Like a meme stock is something that just runs on fumes, like GameStop back in the days, right? Diamond Hands and Reddit and everything. Whereas Tesla is driven on a deeply fundamental level. When I do my analysis of Tesla, I'm always blown away how tangible these cash flows are. It's very different. If you look at Palantir, for example, that's complete fantasy land, how this PE is actually getting justified in the future. Like, when will they catch up to the price? I think Palantir is in a beautiful, super expansive market. They're perfectly positioned, but the price is a little ridiculous. And if you go into when does Palantir make the money to justify the price and project it, it's a long time. If you do it for Tesla, it's no time, right? If robotaxi is on the trajectory that we see right now, in 2026 already, this will look dirt cheap, this price. That's also why it's not going to stay here. So actually, every time I look at the cash flows and project the future cash flows, Tesla is one of the most tangible stocks that are out there. And so it's a completely wrong comparison. And then Bitcoin finally is a completely different logic to it, a completely different economics to it than any kind of earnings power driven stock. Nice. So it just shows me that he's not really understanding any of the three things.
Let's listen then the rest.
The fundamentals, though, is that Elon is back and he's as engaged as ever. And I wonder if you think Tesla has left behind its sort of political issue in terms of being aligned with politics that not everybody necessarily agrees with, that hurting market share, particularly overseas in Europe.
Yeah, it's very hard to know how this will evolve, but I think what we are seeing is that, at least for now, there is a more engaged Elon Musk. We saw that with his open market purchase. And really, that's what the comp plan that the board is proposing and that'll be voted on at the AGM on November 6th is really trying to get at, is a more engaged Elon Musk to focus on really the things that will drive growth for Tesla. So there's no guarantee, but it really is a big step forward in guaranteeing Elon's engagement and focus with Tesla.
I mean, Dan, arguably the retention of Elon Musk or having him more engaged is most of value to kind of keep the story running and feed into the retail fan base. I mean, there's $1 trillion in market cap of the, let's say, 1.4 trillion that Tesla has right now, which, you know, is kind of about, hey, the future is going to be great and we're going to be a big part of it, as opposed to what they're doing on the vehicle side.
Yeah, I mean, this is an ultimate narrative stock, right? It's again, the vehicle sales that the earnings power that you see today from vehicle sales is in many ways, you know, a fading story. The future growth that is there, and that does underpin the view of bulls, is something that people are getting excited about. But in many ways, Tesla gets the credit for this today versus, you know, others that may not get the same credit because of the power of the narrative and the power of excitement around Elon Musk and what he's done for them.
Okay, so he just doubles down on Tesla is a story stock. It's still a story stock. None of this is coming anytime soon. And that the retail, all he's doing is exciting the retail to pump the stock.
Well, I think where he's right is that Elon Musk plays a major role because we need to have some faith in execution in the future and the visionary leadership that Elon has displayed in the past. Where he is wrong, Dan, is saying everything is just narrative and meme. And that's what the other ones are lacking, because he's implying all the other companies, whoever they would be, Waymo or something, would be on the same level if just Elon would show up on their side. That is not true, because Tesla has dramatic amounts of fundamental technology that you can triangulate into the future that the others don't have. From Optimus to robotaxi to compute to all these things. If you understand anything about FSD and robotaxis and manufacturing capabilities, just on a factual infrastructure level, Tesla is ahead of any competitor by tens of billions of dollars in investment in technology and many, many years of development. So these are all facts on the ground.
Yeah, I just looked it up, and retail as of September is now just 31%. And I don't know how accurate this part is, but yeah. And it says 31% is owned by retail.
That's pretty low. That's a big change.
Yeah, and hold on, let me just take a quick one more time look here. So 15.8% is insiders, 14% is mutual funds, 12% other institutional investors, 26% ETFs, and 30% is individual investors. So, so that, I guess my point is, yes, it's true that retail, Tesla has the most number of retail investors at 10 million. That was more than GameStop. But the ownership is at 30%. And that is actually, that is going to change. Like there's going to be more and more institutions buying in, and more of them are buying more of the stock as well. Both of those have been increasing over the last quarter. So I think it was you could have called it a meme stock, maybe, if you translate that to retail is got a power. Now, I don't know if you can call that anymore. I don't know
Also,
if retail has as much power.
Of that, of course, Dan is a Wall Streeter, so he wants to bash retail a little bit. But when you look at what happened over the last 5 years, I would say maybe 6 years, what is retail? Is it you and me? Is that Stephen McRyan? Is it Chris Camillo? Is it Kathy Woods? Like, what is retail, right? You see that retail has caught up and overtaken Wall Street in many respects on YouTube. Like, and I say this very, consciously, right? If you look at the best YouTubers on Palantir, on Bitcoin, of course on Tesla, they're just far ahead of any Wall Streeter. The Wall Streeters who are smart, like Dan Ives and Adam Jonas, they're watching us to see what's happening. And then you see Kathy Woods. I mean, what is an ETF? Is that retail or is it institutional? Because they sell to retail a lot and to institutions. What's the plan, right? So I think this dichotomy is a little outdated, especially with high interest stocks like that. And you have to judge it stock by stock. Of course, GameStop, also, if you call these guys, retail, well, these were some very, very savvy people who crushed a bunch of hedge funds. So yeah, they were retail, but they totally defeated Wall Street in a very targeted, very sophisticated move. So, the world is changing. Robinhood and things like that are great examples. So I think these worlds are blurring. Capital becomes more and more important in the age of AGI, and Tesla is the center of the storm. And so you have to be a little cautious to come up with these simplistic worldviews that Dan is kind of pushing here.
Nice. Well said. Okay, good. Appreciate that. Let's go to the next one, George Gianarikas of Canaccord Genuity. We've been following him quite a few, over time. And he's one of those people that thought I'd share it here. He was very bullish about Tesla, but it's always very low numbers because he'll say the right things, but he doesn't really, do a discounted cash flow for future earnings. He raised his price target from $333 to $490. I mean, that's crazy. That's $160. That's like, yeah.
Well, it's 33% or whatever, like some insane.
Yeah. I mean, his reasons is raising deliveries. Okay. New models. All right. It's like that was new. Energy storage. Okay. That's great. The comp package. Great. And then, humanoids aside, the most success Tesla has is robotaxi, the fewer vehicles they will sell. And we think the company knows this. So he's actually still stuck on their vehicles. He's going, don't they realize that they're going to sell less vehicles? And he thinks that the board, purposely lowered the target of 20 million or gave the target of 20 million cumulative sales when it's only going to be 12 million more required. Like it's a gimme, he said. Anyways, take a look at his last conclusion. I thought it was there's so many weird things here. Okay, so he goes, this wasn't an easy one. Okay. The potential for a downgrade was high as we weighed the tailwinds and headwinds to earnings. So wait, if the potential for a downgrade was high, why did you raise it by $160? And then he talks about the tailwinds and headwinds to earnings. Why would that matter if your price target is a year out from now? Anyways, yeah, I just thought it was kind of weird.
Well, what you see here, when you see these things, what these analysts are doing, it's very important to understand what business they are in. That's a big mistake by beginners looking at these analysts. They are not in the business of predicting the future, and they're not in the business of predicting any stock prices. They're in the business of keeping their job. And their job is not knowing much. They're sitting there with the banks and trying to cater to clients. So what that means is they're not sitting here like me or CERN and with a model that is actually realistic and trying to model out cash flows and discounted cash flows. They're listening to their clients. They're watching Dan Ives, maybe they're watching us, probably not this guy. And then they are adjusting their prices, right? They're saying, oh, Tesla's going up. I'm behind. I'm on 333. I think everything's going up. Everyone thinks it's going up. I need to raise my price target. And then they're trying to reverse engineer their argumentation into this. And then you end up with ridiculous statements like that. It's ridiculous because if you say, oh, that was a hard one, it's unclear. There are these tailwinds and the headwinds. They're selling less cars. If they have more robotaxis, who the hell knows what happens? Okay, let's raise the price target just a little bit by $500 billion market cap. So because he couldn't make up his mind, he said, oh, let's just put the price tag a little higher and increase the value of Tesla by 500 billion, by more than the cumulative amount of the entire auto industry, because I'm not sure right now. It's like, what? What are you talking about? Like when you actually, put this into an Excel, what does it mean to raise it 50%? 33%. It means $500 billion or 450 billion in additional market cap. He just raised Tesla's valuation on his price target more than the entire value of the global auto industry, and says, yeah, it was hard. I don't really believe the story. Let's just adjust it a little bit. It's like, what?
This is telling. He goes, not to mention struggling with valuation. So this wasn't an easy one because he struggled with valuation. Then his answers are, with some momentum on near-term estimates, okay, potential for more new EVs. This is just momentum, and these are just potential. A continued expansion of robotaxi and the possibility of transformative developments in humanoid. Okay, we're going to raise it. It's all like guesses, as opposed to, like you're saying, right? The proper way is to figure out what the robotaxi future is going to be like, what the humanoid robot, and then you can put a probability and a possibility to that in the future. To Tesla, you can say, yeah, they're not going to own the whole market. They'll be 20%. Fine, do that. And then you work that out. Then you bring it back to what the price target should be this year, next year. But this is kind of like the stock jumped.
Yeah, and if you do that, you arrive at totally different conclusions than these guys. Like I've just put out my latest future fair value, December 2025. I projected it 847, so $850. That would be discounted cash flow for 10 years. With pretty reasonable assumptions. I just adjusted some more stuff to account more CapEx for robotaxi and stuff like that. But, that's what we are talking about if you do any kind of DCF model. And then they're saying it's overvalued. I'm saying it's 50% undervalued. It should be 100% higher right now.
Yeah, that's the future value. And then you discounted it to today's price. It should be at this price if you believe. And then your forecast is you would consider to be realistic, that one? Is that the conservative one, or that's the realistic one?
It's the base case. I would say I'm a little conservative on it. I would say it's like maybe 10% under what I think is going to happen. Okay. But I'm also optimistic. Who knows? Like, I think the base case I have is pretty realistic.
Yeah. Didn't you say that you just...
A million bots, for example, a million bots by 2030.
Yeah, that's base. That's what he's saying. Well, didn't you also say that you've recently done a more conservative and a more bullish case? Did you not do that? Yeah. What is the present value of the stock would be by the end of this month if it was conservative and if it was bullish?
By end of this month, I don't know, but by 2030.
No, sorry, the end of this year. The end of this year, 20. Yeah.
I would have to look that up, but my 2030 price points are roughly 8,000 for the base case. It's 14,000 for the bull case. So that's pretty aggressive. And it's 2,000, I think, 2,000 or 2,500 on the bear case. But the bear case is basically total disaster, right? It's like, okay, robotaxi fails to really launch or scale. Optimus is completely lagging behind. So the bear case is pretty serious and not too realistic, in my opinion.
Yeah.
And even then, because it's energy and all these things that you cannot stop. You cannot stop the affordable model. You cannot stop energy. Even 2,500 by 2030 is not the worst return from here.
Yeah, the 3x, right? The 4x, yeah. More than 4x, yeah. 5x.
It's 6x, yeah.
6x, okay. So that's one more benchmark So these guys, they reiterated the buy on Tesla to 475. Okay, but here's the interesting thing about these guys. They actually was at 475, or they jumped from 333 to 475 in June, 3 months ago, when the robotaxi launch happened. So that was great. They went ahead of this stock. They were bullish on the robotaxi, but then today they just stayed flat at 475. And so they said that, third quarter preview benchmark is modeling 442. Now we're watching this rise. Consensus is 448. This is rising. Strong rebound from second quarter. Stock setup. Shares up 28 to 30% in September, raising bar for upside surprise. Risk of volatility if mix or ASPs disappoint. Look, policy changes may create fourth-quarter demand, but seen as temporary. So they just stayed flat. That was their thinking. Yeah.
I think
potential
that's a better
volatility in fourth
strategy.
quarter.
In a way, that's a better strategy because it's a little bit more logical, right, to increase it after robotaxi launch and not temper around right now, because why would you, right? It sounds like if you temper around your price right now, you look like catching up to the stock, chasing the stock price, which makes you look very dumb. But if you do it back then, I have more respect for benchmark to say,
Yes.
why would I adjust it now just because it runs up? I made my decision to really raise it 33% or something
Yes.
in June when it launched, because yes, that's an important milestone. Let's wait and then raise it again if they launch the affordable model or remove the safety drive if actually something happens. Whereas these other little phonies, like, oh, the stock is up 30%, I should adjust my stock price. It's really dumb.
Yeah, exactly. That it was good that they made it. They made the jump. They made the raise prices at the time of the robotaxi launch. That was definitely a key milestone, clearly. So what is the next key milestone, Joe? Would you say that FSD version 14, if it launches this week? I don't think so, right? Just a new version, and everybody freaks out how good it is. It doesn't matter for analysts and stock price, correct?
Yes.
What would you? Are you still thinking it's really the removal of the safety rider?
Well, very tactically, if you look at October, very exciting month. So we have deliveries coming. That's like it's not a huge catalyst, but it will tell us, okay, do we get more substance into the foundation of the share price right now, or does it drop 5% because they underperform? So minor event, but important if you want to put on some trades in October. I think by far.
Can you pause? So you see that the consensus is 440. What if it's 480? Is that good? I mean, what's going to happen? We don't know, right? Because it could be built in, not built in. If it's 500, 510, everybody freaks out. Few of us, the betting markets think it's going to be over 500, but so far, the consensus is
more like
low.
In my opinion, there's more downside than upside risk here, because if they come in very low, it just fuels into disappointment.
What's low? 480 would be low. 450.
No, 430 or something.
Okay.
430 would be low. Then we have a risk of dumping a little bit, $20 or something, right? Everything to the upside will be discounted, in my opinion. So I don't think we can see any kind of big rally, even at 500, because everyone is going to say this is an exceptional quarter with this whole expiration thing. We're just building up a giant cliff. We are dropping down. The higher they are now, the more the cliff, and blah, blah, blah. So I don't think there's any upside potential here that is serious, like 10% or something. It's, of course, if it's 500, we're going to go up 5%, maybe 3, maybe 2.
Sorry.
So I think the biggest catalyst are, of course, earnings, but the biggest catalyst is also not removal of safety driver. I think it's just not going to happen in October. I always bet on November, maybe December. I think in October, the big surprise will be the affordable model launch, potentially worldwide, who knows? Because it's totally not on the radar of people. I think everyone has forgotten about it. Everyone thinks it's not happening because there's dead silence around it. And my theory, I give it a 90% chance. I'm leaning way out of the window here. It's kind of dangerous for me, but I put it a 90% chance that this thing actually launches in October. Why?
What launches?
The affordable model.
Oh, yeah, of course. Yeah, no. Why do you think that you're putting yourself out there? I mean, we all are saying the same thing. It's going to happen.
Well, because maybe we all say that, but we are special case. because I think Wall Street does not factor that in, because what is the biggest catalyst for all the conventional analysts? It's the federal model launch, Gary Black and so on. And also all these people it's a huge deal because all the auto analysts understand this is a 3 to 8x expansion of TAM, depending on the exact price point. If it's significantly below $35,000, the viewers have to understand how important that is. If you look at the price elasticity curve with automotive on EV, you see an 800%, 8 times increase in the total addressable market if you would drop it to $29,000, which they can't, I think, right now. But even if you drop it to 32,000, it's a massive increase of 3 to 4 times the entire market. We have to understand what that means. It means you immediately could make 4 times more money as all of Tesla on auto. So this is not it's not small potatoes. It's the biggest possible potato outside the new revenue streams, of course. And it's immediate. And you know my point. I think you view it very similarly. They had enough time. It's the easiest launch in Tesla's history because it's the most minute changes. They had more than enough time to prepare. It's very likely they have been ready in July or August or latest September would have been fully ready to scale. They delayed it strategically because of the tax credit expiration, because you don't want to cannibalize Model Y sales in this very critical moment of tax credit expiration, which only became knowable July 4th with a big, beautiful bill, really, or maybe a couple of days before. So they had to react to that. And all of that makes the odds that this is getting launched now, and I go into a video today actually into what now means. Does it mean this week, next week, or October 16th, which is my best bet? When is the exact launch? When is the announcement?
Sorry, why October 16th? Why
so
not October? Why not announce it at 2 days later, or at the earnings call, or not at the earnings call, but October, the first week of October.
So if you reason through it, I think you want to not do it this week because that would be too disruptive. You have the Model Y. People bought the Model Y. You don't want one day after I buy my expensive Model Y and have to now mentally deal with a tax credit expiration. And in this noise, you don't want to launch it, I think. So the earliest, in my opinion, would be next week. But if you do it next week, there can't be really a launch event because it's not enough time. So I think then the next problem is if you launch it now, then you have to already talk about numbers potentially at the earnings call. You have to say, okay, how many or what's happening, in my opinion. If you launch it just 5 days before earnings, you don't have to talk about these numbers, but it's all about the hype, the news in the earnings. Like, boom, we launched it. Now it's off to the races. You totally preempt this whole Q4 dystopia, right? In earnings, you say, well, now we launched. What do you want? Now we are off to the races. It's going to be beautiful. So I think the timing is very good. If you do it October 16th, which is the Thursday before earnings, because they skew towards Thursday, if they do that, the most likely announcement would be 10 days before, because it's Tesla cadence, right? They announce these events 10 days earlier. So that would mean next week. And that's my best speculation. I think the odds that they launch it just before dirty without an event is the second most likely. And the least likely is they launch it after earnings. But that wouldn't make too much sense because they can't launch it in November. They need the sales, right? They need to do it kind of now. But I think I view it as more likely give it 2 weeks to temper down and have the Model Y, inventory through and have the noise of the tax credit out. So I think that's the most likely, but we have to prepare for definitely end of this week, could already launch, and what do we do now? And I think it's a pretty safe trade, in my opinion, because it's guaranteed, in my opinion. If they launch it, it's under 35,000, the stock goes to all-time highs, which is only $40 from here. I'm very bullish on that. I think the Tesla community is so into robotaxi and Optimus that we discount this, but I think the entire institutional investor base is going to freak out positively.
That's good. Yeah, it's good logic. Good logic, Joe. I really appreciate you taking so much time to think this through. Your logic makes sense.
Well, because for me, this is actually a trade. That's why I have to really think it through. I want to actually put on a trade on this.
You're going to put a trade on it. I'm not going to put a trade on it. I love it. I'm still at the idea that it's going to be announced. Like I don't think they're going to do a big announcement, like a big presentation. I don't know what you mean by that, like some sort of actual event.
I think when you think it through how important this is, it's free advertising. It would get global coverage. It's a huge deal. Like, do you really want to skip it? But why? Why would you?
Mm-hmm.
You really need to get the
Cybertruck
word
event, like the Tesla Semi event. But, they didn't do one for the Model YL, right? They didn't do one for even I think I heard that even the Model Y, they didn't do it. I don't remember, but I don't think they did it.
They did for a Model Y. They had a big event. But I just think, it's very important. And then and also, the Cybertruck, they did an event, but you didn't even need one for Juniper. You don't need, because you have all these Tesla fans. Now you're launching a car into a vast new market without Tesla fans, right?
Gotcha,
This is everyone. So you need to do something like that.
Yeah, because it's a general consumer. You're breaking through to the bigger market, people who, like the lower cost people are buying that, not the
you
focused
need
tech-driven people.
Suburbia, you need everyone now to pay attention. So I think it would be crazy not to do an event.
Okay. And then if that's the case, you're right. It won't be next week. It'll be the following week, the 12th to 14th. Okay. Ooh, good thinking, Joe.
But the announcement of this event has to be now.
Happen 10 days before.
It needs to be next week. So there's no time to lose. I think this is happening. And so for me, for trading, but I will go into this tomorrow. We have today will be a video out to just explain the exact setup. But tomorrow, the technicalities, what you do in this thing, because you have the deliveries, which is a negative 5% risk, in my opinion. Not likely, but can totally happen. So if you go in now with a full trade, you might, take a little hit. Well, you take the risk you don't want to take. So the question is, do you do it on Thursday or Friday or Monday?
Mm-hmm. Okay. So we are expecting the deliveries and production numbers to be shared 2 days from now, Thursday.
Yes.
And then you're explaining that you think that there'll be some sort of announcement. Okay. And then the people who thought that they might actually announce it today, which is the final day of, the $7,500 credit, turned out to be not right. Because if they announce it today and people put the orders down and put $250 down, that's enough to still qualify for the $7,500. They can get 10,000 signed up in minutes easily. You know what I mean? So didn't happen. I don't think. Maybe tonight.
Do you want to cannibalize Model Y? I don't think so. You want to have just Model Y all through midnight, sell as many as you can, and then give it maybe a week. So,
I reported yesterday all the things that Tesla's doing to really push hard on the deliveries. And then apparently they shut down Giga Texas production already, like just temporarily, so that they can, all employees are 100% focused on deliveries, helping.
And they're also hiring, I saw on X, they're hiring more delivery people. Like now, it's either because of Model Y or it's because of the affordable model, or both.
Yeah. Thank you, Joe. That was great. Great conversation as always. You always come with very good thinking, and we appreciate it. So check out Joe at pioneerlands.net and then go to his YouTube channel as well. Thanks, everybody. Bye-bye.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.